Welcome back to US Market Pulse. It's Saturday, the market is closed, and it's the perfect time to step back from the charts and we've seen the comments. Some of you are looking at that $250 target, while others are terrified of a drop to $170. The stress is real, but here's the truth. Earnings shouldn't be a gamble. Today, we're doing a Saturday Special Masterclass on how to trade NVIDIA earnings without losing your sleep or your capital. We're moving beyond the danger zone and into the strategy zone. The biggest mistake traders make with NVIDIA is picking a side based on hope. Earnings isn't about whether the company is good. We know NVIDIA is a beast. It's about the market's expectation versus reality. When you trade earnings, you are trading the gap. If the news is great, but not perfect, the stock can still drop because the big players were already positioned for a beat. To trade without stress, you must accept that you don't know the direction. Stop trying to be a psychic and start being a risk manager. If your position size is so big that a 10% move against you makes your heart race, you've already lost the masterclass. Rule number 1, size down to stay calm. Let's look at the safety walls we've been discussing. We know the $185 level has been acting as a massive floor for the S&P 500, and NVIDIA has its own magnetic levels. For the earnings report, identify your no trade zone. This is usually the price range where the stock is currently sitting. If NVIDIA is at $200, don't chase it there. Comes from entering in the middle of nowhere. Instead, wait for the reaction. If the earnings push us toward that $230 resistance or back down to the $180 support, those are your high probability zones. Trading the reaction is always less stressful than trading the anticipation. Here is your Saturday battle plan. Step 1, the pre-earnings. If you are already in profit, take 50% off the table before the bell. Strategy. If it flies to $250, you still win. If it crushes to $170, you've protected your capital. Step 2, the 30-minute after the earnings are released and the market opens the next day, do nothing for the first 30 minutes. So we can't panic buy or panic sell. The true direction of the big institutions usually reveals itself after the initial volatility settles. Step 3, use the VIX. Remember our videos on the volatility index? If the VIX is spiking during NVIDIA news, it means the market is in a fear zone. Don't try to catch the falling knife until the VIX starts to curve down. What if NVIDIA misses and the war risk or economic fear we've talked about takes over? This is where your stop loss is your best friend. In an earnings event, mental stops don't work because the price can gap right past them. Think of your stop loss as an insurance policy. You pay a small premium, a small loss to avoid a total catastrophe. If the stock hits $175 and breaks that support, the masterclass says, get out and reevaluate. There is always another trade. The market isn't going anywhere, but your capital might if you hold on to a losing trade out of ego. NVIDIA earnings will be a roller coaster, but you don't have to scream the whole time. Stick to your levels. Respect the $185 S&P 4. And remember that protecting your mental peace is just as important as protecting your wallet. So, what's your NVIDIA plan? Are you holding through the bell? Or are you sitting on cash waiting for the dip? Let me know in the comments below. I read every single one. If you found this masterclass helpful, hit that like button and subscribe for our Monday morning opening bell analysis. Trade smart, stay calm, and I'll see you in the next one.